Hey guys, welcome to another video. Ever since crypto was the new word on the block for investment junkies, people have been trying to balance its pros and cons. It's true that cryptocurrencies have the power to fundamentally alter the way we think about money and call into question the basic validity of established financial systems. But what are cryptocurrencies' pros and cons? How do you choose one to invest in, or do you opt not to? Keep watching this video to find out the pros and cons of investing in crypto. Pros of cryptocurrency. Number 5. Great risk with greater payoff potential. There are already more than 10,000 cryptocurrencies available, and each one has its own unique characteristics. But there are certain characteristics that all cryptocurrencies have, like the propensity for sharp price increases and decreases. The supply of coins from miners and the demand for them from buyers are what largely determine prices. Furthermore, the dynamics of supply and demand may provide large profits. For instance, the price of Ethereum almost quadrupled between July 2021 and December 2021, providing a tidy profit to investors who join the bandwagon at the proper moment. Number 4. The cryptocurrency's underlying blockchain technology is inherently safe. The infrastructure that underpins cryptocurrencies is responsible for some of the main advantages, not the currency themselves. That is, the blockchain, a decentralized ledger for data storage that keeps track of every transaction made there. A blockchain entry that has been made cannot ever be removed. Additionally, since the blockchain is distributed across a number of machines, no hacker can access the whole chain at once, making the information held therein unbreakable. Number 3. Traditional banks are gone, and a more equitable and open financial system is here to stay. Our financial system is largely based on third-party intermediaries that carry out transaction processing. This implies that whenever you do business, you're putting your confidence in one or more of these intermediaries, which raised some ethical concerns during the early 2000s recession. An alternative is provided by cryptocurrency and the blockchain. You may participate in the financial markets and conduct transactions without any middlemen, since they are accessible to anybody, wherever. Number 2. The cryptocurrency market is open 24/7. The fact that cryptocurrency markets are available 24/7 is another benefit cryptocurrencies have over banks. You don't have to wait for the NYSE, NASDAQ, or any other exchange to start trading for the day in order to buy, sell, or trade cryptocurrency, since coins are created and transactions are recorded constantly. Due to the effect of this, normal stock exchanges are considering the possibility of stock trading outside of typical business hours as well, although that may still be some time in the future. Cryptocurrency may thus be the greatest solution for investors who are always on the road to earn profits outside of regular business hours. Number 1. Cryptocurrencies may enable investors to outperform inflation. Since cryptocurrencies aren't linked to any one country or currency, their price is determined by worldwide demand rather than, example, domestic inflation. But what about cryptocurrency inflation itself? For the most part, you can relax as an investor. There is no inflation because there's a limit on the quantity of coins, which prevents the supply from becoming out of hand. This strategy prevents inflation regardless of whether a currency has an overall cap, like Bitcoin, or an annual cap, like Ethereum. Cons of cryptocurrency. Number 5. Cryptocurrency education requires time and effort. Understanding cryptocurrencies might be difficult at first. The idea of cryptocurrencies, let alone the blockchain, might not seem natural to someone who's not a digital native. Also risky is attempting to invest in something you don't completely understand, although there are many internet resources that may be used to your advantage, like N26's blog series on cryptocurrency. You still need to devote some time to fully comprehend the benefits and drawbacks of investing in cryptocurrencies. Number 4. Investments in cryptocurrencies might be quite risky. A cryptocurrency's price may suddenly soar to dizzying heights, with related rewards for investors, and then plummet to horrifying lows. Therefore, this may not be the greatest option if you're hoping to generate consistent profits. Because of its relative small size and reliance on speculation, the Bitcoin market is particularly susceptible to price changes. This has a negative impact on coin value, which is one of the main drawbacks of cryptocurrencies. Number 3. As a long-term investment, cryptocurrencies haven't yet shown their viability. It's important to keep in mind that cryptocurrencies have only been around for a little over a decade, despite the fact that they are now well known and continue to grow in popularity. The notion didn't fully take off until a white paper on Bitcoin was published in 2008. Stock markets, on the other hand, have a long history. For instance, the London Stock Exchange was established in 1801. For millennia, gold has been known to be a reliable keeper of value. Bitcoins, however, nobody truly knows what will happen to cryptocurrencies in the future, so if you want to invest in them, you must have the courage to do so. Number 2. Crypto has significant scaling problems. You might be excused for believing that digital currencies move at a breakneck speed, and to a certain extent they do. However, when taken to a certain degree, they encounter significant problems that make their wide-scale implementation challenging. The creators of Ethereum have acknowledged that this is a problem, claiming that the blockchain has certain capacity restrictions that reduce the speed at which transactions may be completed. Without even mentioning the possible financial losses it might result in, this can be a painful process for anyone involved in the transaction. Number 1. Security threats might affect cryptocurrency newcomers. Cryptocurrencies may not have the hazards associated with relying on centralized middlemen, but it does not imply that they are fully secure. If you possess cryptocurrency, you run the risk of losing the private key that gives you access to all of your assets. Then there are all the various malevolent techniques of gaining control, including hacking, phishing, and so on. Experienced investors are aware of this, while novice investors are more prone to fall prey to these sorts of traps. We've reached the conclusion of this video. Let us know what you think in the comments area below. Give this video a big thumbs up if you enjoyed it. Also, don't forget to subscribe to our channel and turn on the notification bell so you don't miss any of our forthcoming videos. Thank you for taking the time to watch. Take care till the next one, and good luck.